Howdy there, folks, and welcome into this video here today. A little late Sunday afternoon video on 7 stocks. Yes, 7 stocks that I'm looking at buying this upcoming week and why I'm planning on buying these stocks. Now, if you watch this channel on a regular basis, some of these stocks you're going to know, and a few of these stocks are going to come as a surprise, okay? So, yes, a few of these will definitely be stocks you guys are very, very aware of, and a few will be out of the ordinary stocks. Let's just put it that way, that I'm planning on buying this upcoming week. And if you don't watch this channel very often for any reason, first off, thanks for coming and joining us. But I'm not buying these stocks because I'm planning on trying to day trade them or get in and out or something like that. Like usually if I'm buying for a longer term basis, usually years into the future, or at least a minimum of a year in most situations with these stocks. So yeah, I hope you guys enjoy this video. As always, 2 things I need before we get into this. One is hit that subscribe button down there. It's absolutely free to subscribe to this channel, and if you want to put notifications on, you can. And then second is make sure you download the Hungry Ball. That's a way to track your stocks, your cryptos, as well as keep up with news in relation to the market. We now have a breaking news section. I should update this image. We're basically changing the whole format. We're now having a breaking news section where we write articles on breaking news that's happening in the markets. You can listen to earnings calls right inside the app, which is something I do every night pretty much before I fall asleep, including last night. I like to listen to earnings calls. I think that's just a good time where I'm just kind of, chilling out and whatnot, not distracted by anything. You can read SEC reports or inside the app, keep up with financials, news in relation to those stocks, all those sorts of things. It's on your iOS and Android store now. It's absolutely free to download. Alrighty, guys. So let's get into this. Alrighty, so first stock up here of these 7 stocks is Sam, Boston Beer Company. So Sam Adams, they have the Oktoberfest, Winterfest, all those popular beers, and obviously Sam Adams. They also own a bunch of smaller brands, and then they own a really large hard seltzer brand called Truly. And that's pretty much the second biggest player in that market, only behind White Claw, and Truly over time might end up taking over White Claw as being the most popular in that space. But if you didn't know, essentially, hard seltzers were this category that was growing like insane, okay? And sales have just slowed down massively. And Sam's called that out, and every company in this space has called that out. Look at this, even here. Hard seltzer has slowed down, but will be around for a long time, says Heineken USA CEO. And so essentially, everybody that's in this the beer market has tried to get in the hard seltzer category, but really that category is dominated by White Claw and Truly. Those are the 2 dominant players there, and its growth has slowed in a massive, massive way, and that's why this stock has gone from $1,349 to a 52-week low. Literally on Friday, it closed at, or it was at a 52-week low at one point, right? $462. So I just literally started a position in the stock, in a very, very small position. I bought like $3,000 worth or so of the stock, and my plan is over the next several weeks or several months is to build out that position bigger and bigger and bigger until hopefully it's a 6-figure position for me. Is this going to be a potential $1 million position for me? Probably not, to be honest, but can it be a 6-figure position or maybe even a multi-6-figure position? Yes, I definitely think Sam could be one of those stocks for me. I look at this company, I like the long-term future, and I like how much the valuations come down. I'm just of the understanding that there's a high probability I'm going to be able to pick up shares even cheaper in the future weeks or future months. That's why I buy a smaller chunk at first, right? If you're in a raging bull market where it's pushing up all stocks, it's a little different scenario. You kind of almost have to go all in a stock as soon as you start buying, right? We're not in that sort of market unless, this market is a very confused market right now. If you own Tesla stock like I do, and I'm sure a lot of people watching this, it's definitely, that's great, right? Tesla's doing great. Stocks like Nvidia and AMD are doing great. Those stocks have been beasting. And large caps, big tech, have been doing great. But let's be quite clear, the under $10 billion market caps, a lot of those stocks have not been doing good. A lot of those stocks are down 50, 60, 70, 80% from 52-week highs that they reached at some point in the past 52 weeks. One of those stocks is Sam, Boston Beer Company. So, yeah. My plan is if this one shoots down more this week, I'll definitely probably buy some more shares of this one this week, probably a much bigger amount of money than this past week. And when it comes to all these stocks that are down massively in the past, over the past, let's say 6 months, 12 months, a lot of folks are are basically employing tax loss harvesting, which I spoke about in a video recently, where essentially they're selling off some of these stocks, figuring these stocks are probably going lower over the next month anyways, right? That's their thought process, not my personal thought process, but that's a lot of folks' thought process and a lot of fund managers. let's go ahead, take a loss, write it off against gains we have in certain stocks that we've taken this year, and then go ahead and buy these stocks back in January or February. And so that's a lot of the way a lot of folks think out there, because basically there's a 30-day wash sale rule. So if let's say you bought SAM at $1,000 a share hypothetically, right? You're down huge, but you've taken some other huge gains in the market. You go ahead, take your loss on SAM. You basically don't make any moves with that stock for the next 30 days, then go buy it back 31 days from now, right? Or 35 days from now, or whatever you want to do as far as that goes. So that's going on with a lot of these stocks, and it's probably going to continue to go on with the SAM. For somebody like myself that's planning on, if I'm buying the stock, planning on holding it for years to go in the future, I just look at that and I'm like, push the stock price down as much as you possibly can so I can get as many shares for as cheap as possible, because I have a finite amount of money I'm looking to put in this stock, right? So I'm like, put it down as much as you want to possibly can, and I'll go ahead and take that. So yeah, that's one. Next one up here. This shouldn't come as a surprise to anybody that watches this channel on a regular basis. This particular one, the Honest Company, HNST. So yeah, this stock shows any major weakness at all this week. I'll continue to pick up shares this one. I'm at a place where I probably have, maybe a $250,000 in this stock now or so. I would like to get it to potentially even maybe, I don't know, I might even get it across my big private account and the public account. I might be looking to get this to like $500,000, to be completely honest. I wouldn't mind it. So if this baby shoots down some more, I'm going to continue to pick up shares. The valuation's just, getting absolutely decimated in this one. You have share lockups that have been going on. You have a situation with the stock where it's trying to find its long-term shareholder base, because essentially this company went public in 2021. And what happens with a lot of these companies when they go public, in a year, they have to find that long-term shareholder base. And the Honest Company is looking to find that long-term shareholder base. They're finding folks like myself, but they need to find a lot more funds and other folks to, invest in this company over time. And so they're just going through a tough time when it comes to stock price. The company's fundamentals are amazing. That last earnings report was amazing. There's no, you can't say anything bad about that. I looked at the entire report. I've listened to a conference call twice for this company now. The fundamentals of the company are phenomenal, and actually even better than I thought they were going to be. But once again, it's just a stock price that's just in a bad place right now, and it can't find buyers. So when you're in that sort of situation, your stock price is going to flounder. And I've always kind of felt secretly that the Honest wants 7. I feel like the Honest wants a 7 in front of it, kind of like ELF. If you remember what happened with ELF, ELF ended up hitting 7 something. This is a couple years ago. I bought that stock and I got it for $7, $8 a share. And it's almost felt like Honest wants that. And we'll see what happens, obviously, there. But I am a full believer in this company's fundamentals over the next 3, 5, 7 years. And it's one of those that, if I buy a really large position in this, I'm not losing any sleep over this stock. I'm very, very confident in the business model, the products they have, and their expansion opportunities over the next 3, 5 years. Okay. So yeah, that's another one of those that I'm like, hey, you want to give me shares for $7, $8, $9 a share? Give me as many as you can, okay? Next one up here, this one shouldn't come as a surprise to anybody that watches my channel on a regular basis, Corsair Gaming. So Corsair Gaming is in an interesting spot. So obviously, I've been buying the stock this year as a long-term investment, right, for several years out. But this stock has just been devastated. It's in a really bad place in terms of stock price goes. The fundamentals get much more appealing in 2022 because essentially 2021, they've had a comp against 2020 numbers for the most part. And so they had some hard numbers to comp against. Now, the first quarter and even a little bit in the second quarter of 22, they're still going to have tough numbers to comp against year over year, okay? But what's happening now with Corsair is everybody's going to start viewing the stock in 2022 as, they're going to have the easy comps coming now. And Wall Street likes to look at a lot of these shorter term metrics and things like that, and they start putting these things together. And Wall Street will usually try to get in maybe 3 months ahead of time before they start having those easy comps and whatnot. So Corsair, if somebody can just learn how to hide the sell button for the Eagle Tree Fund, if somebody can just learn how to do that, I think Corsair is one of those stocks that is primed to have a pretty epic 22, 23, especially in the back half of the mid-year to back half of the year because of basically those easier comps coming, strong sales, strong innovation at this company, and a fundamentals that's really, really exciting with a valuation that's pretty darn cheap for this company, especially in the industries they're in. Now, there's a lot of people talking about, if Corsair Gaming could be set up for a massive short squeeze. Sure, I think it would take a really strong holiday sales period where it kind of blows people out of the water, and then I think it would take a situation where Wall Street's starting to look at this and like, hey man, these comps for Corsair as 22 goes along are going to get easier and easier and easier to beat these numbers and show impressive growth year over year, right? Maybe we should go ahead and start flooding in the stock. Then the shorts get caught in a squeeze situation. Once again, this isn't something I'm playing personally from like thinking about could it squeeze short term. Obviously, it's definitely possible, but you always have the Eagle Tree Fund out there, and what if it goes to 33 a share? Is also an Eagle Tree Fund selling a bunch of shares. So you never really know what the situation is there. All I know is I like this one for the next several years. I'm a happy buyer. If it goes lower, especially this week, I'll be a bigger buyer. Another one of those stocks that's caught up with tax loss harvesting, in my opinion. If you look at this stock over the past year, it's just been in a vicious downtrend. Almost, it doesn't really matter where you've bought shares at for Corsair Gaming. You're down on those shares, and so a lot of funds or investors in general say, you know what? I'm just going to go ahead, sell off this stock, buy it back in late December or January, right? Because think about it this way, right? Corsair Gaming hasn't done anything. So a lot of folks are looking at this and like, dude, this stock's not going to do anything. Like, why is it all of a sudden going to go up? It hasn't been doing anything. It's probably going to be at $23, $24, $25 a share in January anyways. So I'll just buy it back then. That's the way a lot of people think. Once again, that's not the way I think, but I can understand why a lot of fund managers and a lot of investors in general think that way. Because you're looking at it and it's like, the stock hasn't been doing anything. Why not just sell, buy back in, take the loss on it? Boom. Okay. So that's another one of those that's caught up in that, and it probably will continue to be caught up in that for at least the next several weeks in regards to Corsair Gaming. But yeah, if it goes lower this week, I'll be a buyer of that one. Okay. Next one up here, a surprising one. This is not a stock I have any position in right now, but it's TDOC, TDOC. I've looked into this company, and I like what I see with the long-term vision of this company. I think I don't love the short-term financials of the company, I can tell you that, in terms of their loss and cash flows and those sorts of things. But long-term, it's a hard story not to be extremely excited about and be one of those that's a very, very sticky business model. So the way I look at TDOC here, the stock's fallen massively. It's literally at its 52-week low, right? 116 is a 52-week low, 308 is a 52-week high. If we go back to 2019 in regards to TDOC here, it's a stock that was trading in the 50s, right? And now the stock is up a lot since then. Let's be honest. I mean, it's basically a double up since back in 2019. But remember, this company had a game-changing thing happen to them. Well, two game-changing things. One is they bought Livongo. The second piece is because of Rona, it pushed the adoption of something like TDOC and anything that's virtual healthcare way ahead of where it should have been. Like, this was an extra 3+ years of moving to the future faster. Let's just call it that, okay? And so this is something that's benefited TDOC in a massive way and will continue to benefit TDOC. So the way I look at it is I'm like, yeah, so what? The stock has doubled since 2019. They really had 3 or 5 years of extra help come in because you had a once in 100-year health event that forced everybody to think about virtual first. Okay, so that's big. Now, if we go to CathieWoodStocks.com, which tracks Cathie Wood's top 25 investments in the main ARK fund, TDOC's the number 2 biggest weighted position in that fund, and she's down massively on TDOC, and I mean massively. We don't track the actual individual percentage, and I don't know if anybody really has those numbers on how much she's down, and the ARK fund is down on TDOC, but it's a crazy number. That's all I have to say about that one. It's an epic number in terms of how much they're down on TDOC. And they continue to remain committed to TDOC in being the second biggest position. So clearly, Cathie Wood and everybody that's over there at ARK, they believe in the stock. Now, I never just buy into a stock because Cathie Wood believes in it, or anybody for that matter. But I do look at this company as being a game-changing company, one of those that's probably a multi-decade play. Honestly, at the end of the day, when it comes to something like a TDOC, or at least the next 10+ years, it's a really exciting story. It does have the makings of a business model that can be very, very profitable long term. Not in the short term, but long term. It has the makings of a business model that will be very, very profitable. Plus, put up nice revenue growth. So yeah, I look at TDOC here, and I think it's actually an opportunity, especially if the stock goes lower this week. And if I can ever get the stock for under $100 a share, that's where we're really talking, okay? At that point, the risk reward is too exciting for me, especially as somebody that's a multi-year investor, if I can get the stock under 100. It remains to be seen, but remember, we've been talking a lot about tax loss harvesting. Hey, where can you get more tax loss harvesting than TDOC stock, okay? A stock that was $300+ a share and now is floundering around $100 a share. Yeah, it's pretty darn easy. Like I said, everybody that's been in TDOC stock is down, and down a lot, including Cathie Wood and ARK Invest, okay? And so, yeah, that's definitely one I'm interested in. Probably comes as a surprise to a lot of folks out there, right? This one should not come as a surprise to anybody that regularly watches my YouTube channels. And thanks for being here, guys. As always, much love. But Tattoo Chef. So yeah, if Tattoo Chef has any weakness this week, I will be a happy buyer of Tattoo Chef. I've gone over their quarterly report several times now. I've listened to the conference call and their latest investor presentation several times now. I remain more excited about this stock than I've ever been, which is saying a lot because this has been a stock I've just continued to buy and buy throughout 2021, right? And I am more excited about this stock going into 22 and future years than I've ever been at any point in my investment journey with the stock over the past, whatever it's been, 9 months or 12 months or whatever it's been, okay? And so, yeah, definitely extremely excited about Tattoo Chef long-term vision there. This one, it's hard for me to tell if Tattoo Chef has any real tax loss harvesting. So obviously there's that opportunity for investors out there. But I think there's a little bit of a different way a lot of folks view Tattoo Chef. I think a lot of folks like myself view this one as one of those you don't sell no matter what, regardless, because this stock can go up so dang fast. Like we've seen the stock in a matter of days or weeks go from 16, 17 to 20 plus, right? It happens quick. And so I think a lot of investors are like, I'm not going to play with this stock. I'm not going to, sell out and try to buy back in. Similar to like how a lot of folks viewed Tesla, where you just don't trade in and out of that. It's just usually a bad idea, right? And that's the way I personally view Chef, but that's honestly the way I view all stocks. But I think this one has a little bit of a different investor base. I'll be completely honest. This is more of a cult stock, I would call it, than a lot of stocks out there. A lot of stocks we've gone through today, those are just regular stocks, right, with potentially big upside, but they're not cult stocks. Tattoo Chef's different. That's all I'm going to say about that. The investor base around Tattoo Chef is different. You can see it. As soon as the stock ever hits 15, 16, what happens? The shares get snapped up like it's nobody's business, and the next thing you know is 17 plus again. There's a different investor base, and that's why I say this is the most dangerous stock, in my opinion, that short sellers could possibly play with, because you're not going against a normal investor base when it comes to stock. This is a cult-like stock, and it will continue to be a cult-like stock. And so, yeah, all those other stocks, I can understand people wanting to play with them, but this is one you just don't play against this guy. Okay, that's all I'm going to say about that one. Okay, and if it shows any major weakness this week, I will be a happy buyer of that one out there. Okay. Avant Brands, so this is one I could definitely potentially buy this week. So this one's just been devastated. I mean, this one, they reported some amazing numbers, and they've been reporting some amazing numbers. Like you look at the quarterly numbers, they've been pretty darn impressive out of this company. But let's be quite honest, a lot of hype builds around this stock, and the hype's completely gone in the stock. There's no hype in the stock anymore now with Avant Brands. But there is still pretty exciting fundamentals. Like I said, if you look at the quarterly numbers, it's hard to be anything but impressed with Avant Brands. And so with how much the stock's down, under a $50 million market cap, company has, as of their latest quarter, they had 8 figures plus of cash on the balance sheet, plus exciting growth story and exciting brands. It's one of those stocks that I can't build this into a massive position because it is a very, very speculative stock, arguably the most speculative stock I possibly am in. But I mean, the potential upside here is pretty crazy for this one. So I almost look at this kind of like a crypto or something like that, where it just has some insane upside here and really exciting fundamentals. Though, I mean, at the end of the day, like you look at their last 3 or 4 quarterly reports, it's impossible not to be excited about the numbers they've put up over the past 3 or 4 quarters. So we'll see what happens with that one over the long term. But this one, yeah, if it shows more weakness this week, I'll pick up more shares of Avant Brands, okay? Next one up here. This one should come as a surprise to a lot of folks. And this one I would call more of a long shot. I'll be completely honest. But if this one weakens a bunch more this week, I could actually buy PayPal stock. I've never owned PayPal stock before, PYPL, but PayPal is just a beast. I think we all know this, right? Plus, they own Venmo as well. I mean, they're just a beast of a business model. Just flat out. They're a profit machine. They're a revenue growth machine. There's a lot of worries about anything that has to do with doing transactions right now, and especially with Amazon potentially getting more in the space. There's worries about Shopify getting more. At the end of the day, PayPal is a giant, and they'll likely compete pretty darn well in this market. So I would call this one a long shot for me this week if I buy PayPal, but it's not out of the realm of possibility. And the thing with PayPal now is this stock has gone down so much that we've been talking a lot about tax loss harvesting in this video. This stock is, a very, very popular stock in the market. And the thing is, if you've bought PayPal in the past year, you are down on your shares. And a lot of folks are down a lot on those shares, right? And so, I mean, heck, you go back just 1 month ago, October 20th, the stock's 271. So the fact is, if you bought PayPal many, many years ago, you're probably up huge. But if you bought PayPal at any point this year, a lot of folks are looking at that and they're like, hey, let me go ahead and take a loss on PayPal, buy it back in January. It's downtrend. It's in a vicious downtrend anyways. Who's to say the stock isn't going to have a 150 in front of it in a month or two, which is certainly a possibility. But yeah, I mean, if this one tanks more this week, this is actually going to be potentially a stock I buy for the first time ever in my life. So once again, I would call this one a little more of a long shot than these other 6 we went into, but it's definitely dang up there, okay? And so yeah, I hope you guys enjoyed this video. As always, me getting into 7 stocks I'm looking to buy this upcoming week. We have a massive deal coming for the private stock group literally this week. So if you want me to email you the deal when it drops, or I can text you the deal as soon as it drops this upcoming week, just go ahead and check out pinned comment down there. Much love as always, guys. Don't forget to subscribe to the channel and have a great day.